David Einhorn, the legendary hedge fund manager, has made a big bet on Chemours Corporation that I find very interesting. And that's what I'm going to cover in this video. So guys, smash that like button, subscribe if you're new, and of course, drop a meow in that chat. You're watching More Money. Let's get it. What's up guys, and welcome back to the channel where the goal here is to help at least 1,000 people achieve financial independence much sooner. And I love looking at David Einhorn's portfolio because at the end of the day, he is a legendary investor, albeit he's a lot more well known for his short positions, but I do like to pay attention to what he's purchasing as long positions as well. I don't mimic anybody's portfolio, but I love to see what the greats are looking at and including in their portfolios. And so you can see here that in Q1 of 2022, Greenlight Capital, which is David Einhorn's hedge fund, actually reported a position in Chemours Corporation, or at least they increased their position in Chemours Corporation by 23% to a value of $67 million. But the value isn't important to me. What's important to me is the percentage of the portfolio. So anything that's approaching that 5% area becomes interesting for me to look at. Now, some of you might not be aware of who David Einhorn is, and I actually got a little bit sad making this video because it reminded me of how old I actually am. So in 2002, David Einhorn actually became popular because he offered up an idea at a charitable conference to raise money for a cancer hospital. And what that idea was a short call on Allied Capital because he felt like they were not valuing the debt properly, and so they inflated the share price as a result. But in 2007, he was vindicated when the SEC investigated Allied and found it guilty of securities fraud. Allied was eventually bought out and taken private by another company. Now, what's interesting to me is there might be a kink in the matrix here because I very vividly remember that happened in 2008. So the fact that this article reported that it happened in 2002 tells me that I'm living in a completely different timeline at the moment. But let's get into Chemours Corporation. So you can see here, this is the company at a glance. They have a geographically diverse operation and they operate in 4 different business segments. Now, I know that at first glance you may not necessarily understand what titanium dioxide is. You might know what refrigerants are, but floral polymers we probably won't understand. But I'll dive into all of these as I go through the segments in this video. Ultimately, at a high level, this is a chemicals company. Their largest segment, or their largest product that they provide, is called titanium dioxide. It's the main chemical that they produce. Now, pure titanium dioxide is a fine white powder that provides a bright white pigment. And so what is it used for? Well, you can see that there's a list of products that they've shown here. So like paints, coatings, adhesives, paper, plastics, printing inks, toothpaste, soap, and the titanium dioxide is produced in 2 main forms. The primary form comprises of over 98% of the total production, which is its pigment grade titanium dioxide. So just an FYI, if you're not familiar with it, I was not familiar with it as I was doing this research. And so what exactly is pigment grade titanium dioxide used for? Well, you can see once again, paints and coatings, plastics, adhesive and rubber, cosmetics, paper, and food contact materials and ingredients. Now, if you search titanium dioxide, you're going to come across a slew of articles saying that it's unhealthy for people, blah, blah, blah. So the point that I'm making here is that it could potentially be banned in the future. It doesn't look like it will be banned just for food products in the future in the US, but it does look like it could be banned in the future in other countries. Now, the ultra fine component of titanium dioxide, which represents 2% of its use, is used in sunscreens and in catalyst operations. So apparently it's used in the automotive industry to remove harmful exhaust gas emissions and in power stations to remove nitrous oxides. So very interesting. So just digging into its safetiness for food products, take a look at the US Food and Drug Administration. They have assessed the safety of it and said that it can contribute to less than 1% of the weight of food, and then it's okay. However, if it's more than that, then it's not okay. And the International Agency for Research on Cancer has said that there is a possible risk of breathing the chemical, but those studies have shown that it's largely unsubstantiated at the moment. However, that could change at any time. So just be careful with this. So there is a risk in the future that it could be banned from food uses and industrial uses where you breathe it in. So think about paint, uses. Their second largest product group is floral polymers and advanced materials. Floral polymers are used in applications requiring chemical resistant, thermal stability, cryogenic properties, low coefficient of friction, low surface energy, etc., etc. And all that really means is that it is a replacement or a chemical replacement, something that's used to transfer chemicals at high heat, and it's a cheaper alternative to sort of like more expensive metal-based transfer products. So that's largely what it is. And just to give you a better idea of what it's used for, so you can see in the automotive industry, it can be used as O-ring gaskets, valve stem seals. In the chemical industry, this is a really good use of it. You can see that it's used as coating for heat exchangers. That's where I would think that it's used for. So think like air conditioners or stuff, right? In the electrical space, it could be used as electrical insulation. For the architectural space, it can actually even be used as water repellent fabric. So that's very interesting. In engineering, this is kind of where I would see its bread and butter. So seals and plugs, bearings, etc. And this one's interesting. In the medical space, it's actually used for cardiovascular grafts. I'm not super familiar with what those are, and so it's interesting that it's also being used there. But the whole point of the conversation is that it's being used in many industrial operations at the moment. Now, moving on to more of the fun part. So in 2022, they're effectively saying that their adjusted earnings per share is expected to be around $5 per share. And if you compare that with their current share price of approximately $35 a share, that's a 14% equity yield. And look what they're doing with that. I've circled it here in red. The majority of their free cash flow, over $550 million expected in 2022, is expected to go to their shareholders through share repurchases. They just created a $750 million share repurchase authorization through 2025. So it's a very interesting opportunity if that equity yield is sustainable. So if we can reasonably get around 13 or 14% a year, this looks like a very compelling investment opportunity. And they did release their Q1 results, and notice that the economics have been strong. They have been able to command strong pricing despite higher input costs. So you can see here that the input costs actually increased by $224 million for them. However, their pricing momentum actually increased by $349 million, which caused their quarter-over-quarter adjusted EBITDA to increase. But what this does tell me is that if demand declines, you could be in a situation where they're producing products at a higher cost, but they have to offload it at a lower cost. So what this tells me that this is a business that could potentially be up and down in terms of results. So some years they do really, really well, and some years they don't do so well, which could be the reason why the current share price is so low relative to their fiscal year 2022 guidance. So the first thing I did when I saw that is I looked at their cash flow for the last 10 years or so, and notice how that free cash flow goes up and down, up and down. In 2014 and 2015, they actually had a negative free cash flow. In 2019, it was pretty low. The cash flow only went above $500 million in 2020 and 2021, and then of course in 2018 as well. So effectively what I'm trying to say is that 2022 is not a typical year. It's an elevated year. So you can't forecast out these results to be around a 14% equity yield into perpetuity. You'd be making a mistake in the valuation, in my opinion at least. Now, in addition to the cash flow that they are generating, they are also paying down debt. But note that they still have approximately $2.6 billion in net debt. And so that's net of their cash balance that they have on the balance sheet at the end of Q1. So just be careful of that. We are in an interest rate increasing or rising environment, so we do have to penalize their valuation for the debt that they have on the balance sheet. I penalize every single company for the debt that they do have on their balance sheet. Even if they say that they're targeting a certain level of debt, I still penalize them for it because I tend to be a very conservative investor, but I'm also open about it. So let me know what your valuation for this company comes in at if you do decide to limit the amount of debt that you're going to penalize them for in your valuation. And this is what I mean. To forecast this, I assume that free cash flow as a percentage of revenue is expected to come in around 8%, which you might consider as too low, but note that the historical average is approximately 5%. I'm giving them a terminal multiple of 15 times earnings, but here's where I destroy that valuation. That excess cash, so that net debt, is penalizing their valuation of $54 per share and bringing it down to $40 per share. So based on the current share price, I believe that the share price as a percentage of their valuation is approximately 90.1%. But you guys might have a different number, and I'm really interested to know what you guys think. I must confess, like I always do, that I'm overly conservative on that excess cash. I penalize them too much all the time, but it's just how I like to invest. And if you want access to that model, you can get access to that model at the lower tier of the Patreons. Now, guys, I do have to remind you that if you aren't subscribed to the channel, please note that 80% of the watch time is coming from people who aren't subscribed to the channel. So if you can, please consider subscribing. Now, looking at hedge fund managers, this is the only thing that I do. I also look at insider buying, and insiders are buying these 7 stocks, and I made a video on it, which you can get to right here.